Friday the 11th of April, ladies and gentlemen, welcome. We've made it. And we've got Mini Cooper.
Thank you very much for having me. It feels like I've been on there for ages.
What better way to finish off the week than with yourself, sir?
We've got Ronnie as well.
We've peaked on the Friday.
And it's been a wild, wild week. Wild, wild week.
It is. And is this your first kind of bout of volatility? Have you seen anything like this before in
my time at IG? No. So I joined IG in September 2021. So
right.
Just past COVID, really, which would have been the last major volatility.
Okay.
When the VIX got to 80 points.
Right.
Yeah.
And when did you first realise that Gary Stevenson was your idol?
When I copied his haircut.
Okay, so that's more of a recent thing.
I used to have curtains before, you see.
Right. Good morning, everybody. How are we doing? Parky, good to see you. Andrew McKelvey. Great shout on Greatland Gold, sir. I mean, that's probably going to be up again today, isn't it? Absolutely fantastic shout. Quarterly production figures out on Monday. So I think that's probably trade of the week. What could have been trade of the week yesterday was that Barclays. Barclays up 25% on the open yesterday. It was a fat finger. Somebody went in to buy 10 million shares at market, right? Which could have either, was it 1 million shares? Or did somebody shout them to buy $10 million worth?
Yeah.
And they bought 10 million shares instead.
Market and just wipe the order book.
Or is it 10 million to buy over the day? And he put 10 million in the open auction. Absolute shocker. Let's have a look at the graph.
Because from our side, when we take large orders for clients, then what we can do is we can work an algo throughout the day, whether that be like a TWAP, so time weighted adjusted price, or a VWAP, which is a volume weighted adjusted price. So it works the order with respect to the volume for the day, and therefore wouldn't have an adverse impact on the price. Rather than just putting a market order, because if that was the case, it could potentially literally wipe out many, many levels of the order book, which, you know, you may not want to do.
Look at that, what we call a GIP, so the daily. You remember, it's the first time that I've used the Lord's name in vain on the show yesterday, was seeing this up 25%. And of course I sat there and did nothing about it. What an obvious slot. I mean, not even if Barclays was getting bid for, would 25% have been the right price. So I'm sorry. I hope, let me know if any of you guys managed to get the short on there, because that was the opportunity of the year.
25%.
25%. £3.09.
Someone must have got in trouble for that.
Oh, I mean, well, what's it? 10 million shares, £3, so $30 million, 30 million sterling, and it dropped 10% before they could do anything. So it's minimum a 3 million loss, more like probably 4.
Big trouble.
Yeah, that's not a good start. Right, let's have a look at what's coming up on today's show, people. Well, you've got myself and looked through to around about 8:30, and then Esar's coming to join us early this week. So we've got the week ahead. Well, how do you even begin to predict what's going on a week out? But it is start of earnings season, so it's worth doing very much. And then
at 9 o'clock, we've got Rich, the man himself, doing the all sessions opening bell.
That's right. Michael Taylor saying missed Tesco as well. Was that because did the stock open kind of unchanged, and then it was Julian shorted them. Is that right? You shorted Barclays on the open. I do hope so. Well done, sir. Fastest finger first.
Out after about 10 minutes.
Not the fattest fingers first. The fattest finger loses. The fastest fingers. Trading days, there he is. Conrad in the house. Very happy. Conrad took advantage of that daily option for 2 days ago now, Wednesday. God, all the days are blurred into one, aren't they?
There's so much to remember. So yeah, it would have been the 9th of April was when Trump put 10% tariffs on everyone but China.
I love the way that you find your memory by coming up here.
Yeah, exactly. So I'm trying to remember stats as well.
Yeah.
And there's obviously at certain points I'm trying to remember stats, but then I've got to try and erase it from my memory because it's changing, it keeps changing, and it could probably...
And there's only so many things you can have in your memory,
Exactly.
right?
Yeah.
Yeah. So how do you tidy it up? Do you sort of mentally put out the rubbish?
So what I do is I write it down and I just memorize it. And before I go to sleep, I'll just memorize.
Brilliant. Wonderful. Right, I'll tell you what, let's go into overnight action, and we shall talk about when I'm going to buy you all drinks. Right, now, I guess the one of the main things to talk about today, apart from the shit out in the market yesterday, is earnings season. So do you want to take us through what we've got coming up today?
Yeah, so again, I have got my notes here.
Nice, nice.
Main ones are JP Morgan and Morgan Stanley, okay?
JP Morgan and Morgan Stanley before the open today.
That's correct.
Usually about 11?
Yeah, so before the open, let me read out some statistics on that. So for Morgan Stanley first, estimate for the quarter is $16.63 billion. If this was the case, it would be 9.9% year-over-year growth. And expected earnings per share for the quarter are $2.26. So that's Morgan Stanley. And then for JP Morgan, also reporting today, analysts are expecting $4.66 earnings per share and just over $43 billion in revenue. Last time they reported in Q4, JP Morgan reached an all-time high after those results. We've also got Goldman on Monday, just to add that in.
Right. So this is the start of earnings season already.
Yeah.
Doesn't seem long ago since we only finished about 2 weeks ago, didn't we?
I mean, yeah, it's just everything's like a blur at the moment.
Yeah.
Like on the lines, we are like exceptionally busy. When there's a lot of volatility, then of course we get more clients calling in. So yeah, just back to back on the lines. But I think with the banks, as we were just talking about them for this year, I don't think they're going to perform as well. 2 reasons. Number one, I saw a forecast where in the US they are going to drop rates by 5 times this year.
Yeah,
that's what I read. But obviously that is I read that around 3 or 4 days ago. But this is always changing now. Right?
It is, and we can do a live update on that.
Yeah. So if that is the case, I'd say it's negative for banks due to the fact that they would earn interest off the net interest income. Whereas before, let's say last year, rates stay quite high, so therefore they really benefited off that.
Yeah.
So I'd argue for this year, given that Trump's tariffs are likely to cause, very high inflation, I would say that banks will not generate as much income from that.
And M&A's just died.
Correct. Did you see how Klarna have pulled their IPO?
Yes.
Yeah, so they pulled that. I think eToro as well.
Oh, really?
Yeah.
I didn't know that.
Yeah, because valuations have just gone boom. So it's when there's such.
Shame. I would have liked to have seen that one.
Yeah. So when there's such uncertainty, of course, it's not great. And obviously, the banks generate a lot of their revenue from M&A, and if there's going to be less companies going public, then it's not good for them again.
And then they start to give people the chop.
Yep.
Right now, talking about giving people the chop. Any of you old ones in the house will like this. Monkey Man, you like this. Do we remember good old Karate Kid, wax on, wax off? Well, here we have Karate Trump with tax on, tax off, tax on, tax off. It is just brilliant. For any of you that have never seen the Karate Kid, you have no idea what I'm talking about. But that is the best meme I've seen of
looks scary,
this whole thing. He does look a bit scary there, doesn't he? Now, since it's a Friday, go on then. I'll buy you all drinks. I promised that if we saw 5,400 on the S&P on Wednesday, I was going to buy you all a drink. Well, here is your invite. Friday, June the 20th. I'm going to put my cards behind the bar for any of you that walk in. What can the code words be?
1974. Oh, word, sorry. Oh my God. I thought you said PIN code. 1974 was when IG were founded. All right. Code word.
So did you just give everybody your PIN codes?
No. 1974 was when IG was founded.
Right, but you thought I said PIN codes.
Yeah, I did. I don't know why.
You've just given everyone your PIN code. Change it. Go on.
Let's say champion the client.
Yeah, champion the client. Give them your £42 that's in your
What
account.
have I just said a number?
So here he is, Tom Sosnoff, Tony Batista, and myself. Sosnoff is back for more. This is going to be in London on Friday, June the 20th. The tickets are free, and now your drinks are free as well, because I'm going to buy them. Don't say I'm not a man of my words.
Rich, how many drinks do you forecast on buying? Like, how many people are watching at the time?
How many people we got in the chat? The codes, we need a code for you. Got to come up to me and go, oi, McDonald's. Well, what happened on Wednesday? 52.20.
52.20. Okay.
There you go. 52.20 was my call. So yeah, it's in Stoke Newington. On Stoke Newington Road in Hackney. We're going to Hackney, people. We need to get a haircut like Mini Cooper here. And there we go. Doors open from 5 p.m. and the actual event itself 6 p.m. 7:30. But come along early, because that'll give me my chance to get you your drink, because otherwise I'll be up on stage with Sosnoff.
How are you going to make sure it's just the one drink? What if people take the mick, go back and get 2 drinks?
Well, this is a great way for me to meet our wonderful lot out there. I've met quite a few of you already, but we various client events or at the Sosnoff first thing. But right, good stuff. So there is the link, Eventbrite. You've got it in the chat. Thank you, Phil. Phil's put it up. That's a much better one than I put up. And we'll see you then, Friday, June the 20th. Look forward to it. So, Mini Cooper, what else do we have this morning? I hear BP have been downgraded by UBS.
Yeah, they were downgraded to neutral. I mean, BP over the past, let's say, 3 years have not done well.
Yeah.
Not at all. However, because their share price keeps going down, that means their dividend yield is now at 7%. Let me just double check that. I've got the numbers.
No, I think you're about right.
7.3% to be precise. And it's, in 2025 so far, it's lost 18% of value.
Okay, we've got Easter, much better. Oi, Scottish man. That's perfect. Oi, Scottish man. Kate Murphy. Kate Murphy, have you touched down in Bali yet? So this is our new viewer of the week. I think Kate started watching last week, actually. And she just flown off to Bali for just a bit of yoga and trading in the sunshine.
It's all right for some.
Any jealousy there? No, not at all. I just left Birmingham, okay. not quite as glamorous.
Soon come.
R6N, good morning to you. Right, okay, so that's the code. Oi, Scottish man. And there we go. Right, let's take a look at futures, because we saw the there was panic at one stage yesterday.
Yeah. So I was working late shift last night.
How was that?
And I'd say it was busy in the day up until around 8 o'clock. It was busy, and then we worked till 9:30. So between 8 and 9:30, it was a bit quieter. But at around 5:30, 6 o'clock, Nasdaq was down 5.5%, and then it came back up a bit.
So let's take a look at exactly what you're talking about in the chart, minute by minute, of what on earth happened yesterday. You can see we had the crazy markup on the night before, right? We need that, because that puts all this into perspective of where we touched yesterday. But let's take you through from when the US opened, right? So we opened at 230, obviously, and we're about 5,340. Not far off where we are right this minute. And then, welcome to 40 vol, right? This was that panic, okay? And this little bounce here, right? That should have been the end of it. This one here should have been enough because we'd already come off 120 points. But this really worried me, this second leg down. I was walking to Waitrose to get my dinner. And I was this was CTAs, right? This wasn't people, because it was attacking the bid, and any kind of bounce, it wasn't hitting it down 1 point, it was hitting it down 3 points. That's the way CTAs try to break the market, and they try and force the momentum. This is commodity trading algorithms. These are the guys that have been short $30 billion in their various books of this S&P. However, we touched the low at 51.20. Please tell me some of you managed to buy that 51.20 low, because then it reversed, and by 7:30 we were up at 53.15, which is where we are now.
Which is when it quiets them down a bit on the lines, because we often get a lot of clients calling in, because let's say if you had a long position at 5 o'clock, and you may not necessarily expect the Nasdaq to be down that much, and the Dow and Wall Street and DAX, right? So a lot of clients call in just to ensure that when they've sent a payment, the funds are in the account, sort of thing, because you can do something called a proof of payment to ensure that the funds are in your account before we actually receive them from your bank, which you can simply upload on the mobile app or on the web trading platform.
Okay.
So that is good to ensure that you're not going to get closed out if you don't wish to do so.
Waka waka. Waka waka, you didn't buy at the low, you were the low, my friend. You were the low. You went in such big size that you managed to kill off those CTAs and ensued the market rally for us. Thank you for that. 51. So we were at 51.80 at 1:45 this morning. Thankfully, I was fast asleep.
Likewise.
You just getting in from the party, were you?
No, I was on the late shift,
and then straight home.
I was done at 9:30. I went to Tesco, got some fruit and nuts and a little packet mix.
Right.
Had that. Had a little bit of leftover chili con carne, which I cooked that morning.
Oh, I was going to have chili con carne last night.
Really good with jacket potato.
Oh,
and sweet corn.
Wonderful.
Had that
carbs at night though. Right, and let's see what has happened since 2 a.m. this morning. We've had a nice rally actually, and it's been constant. Considering what was going on in Japan, right? Japan was down 5% at one point, just with catching up with the US really. That is a nice move. And then of course, all us European lot opening, waking up at 6 a.m. Well, the Europeans at 7, I guess. You saw a nice relief that nothing bad had happened, so they took it higher. This is just the world of 40 vol people, right? Don't pay attention to any move unless we get headlines on the screen. Okay, Andrew McKelvey's saying that there's a BP Q1 trading statement out. Well, that's a little bit worrying, isn't it? Let's have a look at the news here. Just remembering
I did have a quick read over of it, just a very quick scan this morning.
Chart up.
I can read that. Let me read that out, Rich.
Upstream production. Okay, go on.
BP forecast lower first quarter reported upstream production. British oil and gas producer BP said on Friday that reported upstream production in the first quarter is expected to be lower compared to the previous quarter. BP expects earnings in all production and operations segments to be broadly flat from the previous quarter, due in part to price lags in the Gulf of Mexico and the UAE.
It's Gulf of America, people.
Now it is, yeah. In its gas and low carbon segment, realisation are also expected to be flat. BP said gas marketing and trading business is expected to be
That's a shocker. It's just a terrible statement. I mean, you can see the downgrade from UBS, but also remember, as we said, this thing's trading at 341, having been 441 not long ago. Let's see if we can get that. Yeah, there we go. It's down from 440 to 340. What's that? 20%.
One of the biggest
3%.
one of the biggest companies in the FTSE as well.
One of the biggest companies in the FTSE, which is looking up today. We've got FTSE looking up 80 basis points at the moment. So
Love it.
what you are seeing, which is a little bit concerning, right, is the bonds are going back to their lows, right? So the bond price is actually exactly where it was when Trump rolled over.
Right.
Right, the 10-year note 110.40. We're seeing the 10-year yield at 4.45%.
Going up, yeah.
So, has Trump done the equivalent of a Brexit to the US economy?
I was reading on, obviously, what's happening is the price of bonds are going down, yields are going up. I was reading on Bloomberg this morning how, let's say in the '08 financial crisis, this didn't even happen then, and it's happening now, and it's really worried, particularly because US government debt is always thought to be very, 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 very safe.
Yeah,
very safe.
Yep.
I mean, it'd be interesting to see if it does get worse, if Trump's going to pull back on these tariffs, but then that's anyone's guess.
Yeah, yeah. Okay, so yeah, just be careful on treasuries, be careful on the dollar, right?
This weekend, yeah.
If yields are going higher, the dollar should be getting stronger. But because he's destroying American exceptionalism, then money is coming out of the dollar. And remember, there's a lot of debt around the world in all these private equities, venture capital. A lot of their debt is in dollars, right? So if you really take down the value of the dollar, if we start to have a look at currencies today, you've got the dollar yen at 144, sub 144 dollar yen. The euro touched 113 earlier, and the mighty great British pound at the 130 level, because our GDP this morning, we have smashed it in this country. Our GDP is absolutely flying. Let's have a look at those numbers this morning. There it is. GDP month on month was expected at 0.1%. We are up 0.5. Come on, GB.
I'm going to celebrate later by having a big smash up.
A big English breakfast.
No. I wasn't thinking that. I was thinking
Pint of Carling?
I was thinking rum and cokes.
Oh, okay. Well, that's not very British, is it? Got to do something British.
What else could I do which is British? Fish and
Right.
chips.
Let's have a look at what else is coming up today with the economic calendar by producer Phil. Friday, 11th of April. There it was. Month on month, up 0.5%. We've got 130 is the PPIs.
Yep. So month on month estimated 0.2%. And then at 3, we've got the Michigan consumer sentiment.
Michigan consumer at 3 o'clock. So you got numbers today at 1:30 and 3 o'clock. The number yesterday should have helped.
Yeah,
right?
lower than expected.
That should have taken money into bonds because as you can see on my screen, then we've got a core of 0.1, much better than the 0.3 expected. Inflation rates 2.4 and 2.8. The inflation concerns are gone until you slap a load of random additional prices onto.
Yeah, I mean, have you seen the forecast about iPhones? Because a lot of iPhones are produced in China, right, with Apple. I was reading how basically Apple are just flying loads and loads over, because the prices of iPhones for US consumers is going to increase by an extreme amount. I mean, would you still want to buy an iPhone?
Come on, Dr. Watson. Start off.
Dr. Watson?
Yeah.
I mean, it's the same with Tesla, right? Tesla, again, huge company in the US who produce a lot of cars and import car parts from China as well. And the car imports are still tariffed at 25%. And I believe on the 3rd of May, car parts are also going to be tariffed at that same 25%, assuming nothing changes between now and then.
Yeah, which the one thing we can guarantee is that things will change between now and then.
Yeah. We've got 88 days left for a 10% tariff left on everyone but China, which is 125%.
You're going to have a countdown?
Countdown, 88 days.
Yeah.
Like a little chocolate calendar, 88 days.
After eights.
Yeah. More like it.
Arthur Fox Higg, that's exactly the problem, right? Black-Scholes uses US Treasuries as the embodiment of the entire concept of risk-free return. Trump doesn't want to go start messing with that. There's going to be a few people tapping him from the establishment.
Did you see about his crazy idea? So he was got in contact with the Supreme Court, and he wanted to make it where he could try and get rid of Powell somehow. Yeah, I've got the actual Bloomberg screenshot on my phone. Trump asked Supreme Court to let him fire top agency officials. The outcome could determine whether Trump has the power to fire Federal Reserve Chair Jerome Powell and could also impact the job security of other agency officials. That was a headline on Bloomberg.
That's really worrying.
Because really worrying. The whole idea of it
is game over.
Yeah,
if he sacks Powell.
The whole idea of it is a central bank and the government are meant to be independent, because otherwise the government can manipulate monetary policy in order to benefit them. And as an example, we saw Erdogan in Turkey, who really just fudged the whole thing up. He kept sacking like the head of the central bank.
Yeah.
And they got like crazy, I can't remember numbers, like 85% inflation rates. Because you're meant to be cutting rates, but he didn't want to do that, and it really messed the whole thing up. We saw the lira go boom.
Yeah.
So
no, that's the
idea.
System. If Trump takes away the independence of the central bank, it is
game over.
I'm out, and that's why you see gold all-time highs this morning. Have we come back a little bit yet? We have. It was above $3,200, now 3,196. We're going to a quick 2-minute break. We'll be back for the open.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Right, so we've got about 35 seconds to go until this Friday open. Oh, it's felt like a long week. So reminder, we're watching BP this morning. It's not going to be pretty, I don't think. Even with the FTSE futures up 80 basis points, we should see some recovery elsewhere, but BP not looking pretty. What else have we got to watch, young Padawan?
So it was quite quiet today. Main one when I look this morning, so I look on the LSE RNS page.
Got your bell there, sorry.
Over here.
BP, well, the indication's down 2. Let's see if we get an open here.
Oh, I missed it.
Right, so Lloyd's are open. Lloyd's up nice, up to 67 pence. IHG up small. BP, no, still not.
Nothing yet.
Oh my goodness, down 78 basis points. Well, I mean, after a stock drops 23% in a market shitout, I guess you almost get away with a bad set of results. Tesco, where you get your best close, up 1.5%. Where's that top from?
Reese.
Oh, mate, you had a pay rise. HSBC up 2.5%. The Pru up 1.5%. Barclays, that shocker yesterday, a little bit more of a cam open today, up 1.4%. Minnie, take us through some more.
We have got, let's keep with the banks. So we've got Lloyd's up 0.9%. We've got M&S up 1%. We've got British American Tobacco up 0.84%. We've got Aviva up 0.73%. Another supermarket, Sainsbury's, doing well, up 0.79%. And we've got JD Wetherspoon PLC up 0.61%.
Right, let's do a little refresh. On the downside, there's BP still down 70 basis points.
I saw 0.89, so 89 basis points there just before you switched over.
Right, the miners are open. You see the mining stocks benefiting there, up 2% apiece. I've never seen them all within 30 basis points of each other. That is the kind of Friday. I tell you what, there will be exhausted people today, absolutely exhausted. So expect some lackadaisical moves in stocks today, right? When you're mentally exhausted, then risk tends to come lower than being put on. I certainly will not be putting any risk on today. I'll be looking to reduce it into the weekend after my 11 p.m. last Sunday night. Don't think people will be wanting the nightmare.
BP now down just over 1%.
Interesting. Right. SSE up 1.4, 1550. They have had an amazing 2 weeks. Tesco, despite warning on the ensuing UK food price war, still holding £3.20. Barclays 260. What else?
NatWest up 0.95%.
Yeah, it's a nice open, isn't it? Everything getting marked up.
Yeah.
Nobody wants to stick their head above the parapet. WH Smith, probably the outlier there, but it is on a wide spread. Glaxo's 1275. They've had a tough week, haven't they, with that pharmaceuticals now being a non-exceptional item. And Canal Plus up 30 basis points, 155. You saw me buy that one on the open yesterday. Still got them, but
Rolls-Royce is down 9 basis points.
Yeah, there's there we go. Bellway up to Vistry up to Iron Brew not traded yet. God, I could do with an Iron Brew today. Oh, I could do with an Iron Brew.
Do you have energy drinks a lot?
It's not an energy drink.
It's an energy drink, isn't it? An Iron Brew.
It's got so much sugar in it.
I thought it was like an Iron Brew, like a Red Bull, like a.
Oh,
no, I thought it was an energy drink.
Been around long before Red Bull.
Oh, okay. I don't really have them that much.
Bloody English. We've got Ocado up 2.4. That's had an interesting one. Let's just take a quick look at Ocado, right? Because remember they had those great set of. Did they have numbers or was it just the upgrade? No, they had good numbers. And you saw a huge rally on the day. Now where is it? Where is it gone? Remind me what day that was, people. Where it wasn't that long ago. It was down here. There we go. So it went from 238 It was this day here. Yeah, it closed at 251, sorry. And remember, it opened at like the 290 level. And it traded up the next day to £3.04. So that one's held in quite well as well. So Trump managing not to destroy people's Marks and Spencer deliveries. Bonus. Shall we have a look in Europe, young lad?
Let's have a look in Europe, what we got.
Go on then, read those out.
So at the top there, we've got ASML holding up 2.08%. We've got Adidas up 1.75%. We have got Ubisoft Entertainment up 1.19%. We've got Porsche up 1.16%. We've got the banks, both Deutsche Bank and BNP Paribas up as well. We've got Mercedes up 1.11%. Hermes up 0.92%.
And on the losers, it's Stellantis. Interesting. There's quite an interesting story in the FT this morning that Renault completely gets away with all of this because no American want to buy a shitty little French Renault. So they get away with it. It reminds me, it's like Credit Suisse, right? Credit Suisse did amazing during the financial crisis because we had completely missed the move into CDOs and all mortgage-backed securities. So suddenly we looked like, you know, a rose amongst thorns. So Renault looking like the rose amongst the thorns at the moment.
What have Renault ever done to you?
Hey, do you know what? It's my second car. My first car was a Ford Orion Gia injection 1.6.
What's the gear injection about?
Gia's like the kind of sporty, top of the range.
Ah, it's your first car.
Bought it for £1,600 in an auction. And then my second car was a Renault Clio.
Oh, okay.
So yeah, happy times.
I've only ever had one car, Ford Fiesta. Yeah.
Why can I picture you in a Ford Fiesta, music up, arm out the window, sunglasses on?
No, not like that. No, I wouldn't. Nah.
You wouldn't what?
No, because you imagine me like playing like really loud music, windows down, like sunglasses. No.
Was it yellow?
It was dark blue.
Ah, I was
Yellow.
thinking more the in-betweeners.
Yeah, that's what I was going to say. Like Jay Cartwright.
yeah. All right, Jay. Andrew McKelvey, you're right. Yeah, the Audi's made in Mexico facing a 45% tariff. He's just Anyway, we don't want to even mention him this morning, do we? Rheinmetall, what a week that's had. Shall we have a look at some of the best trading opportunities that you have seen? There's investment opportunities, right? But stocks like Barclays yesterday, you saw a trading opportunity. Stocks like Rheinmetall, you saw a trading opportunity. The problem is when things are so hectic in a morning, right? Mistakes are made, and as Eric Jones says, any fat fingers they get through the gap, right? Barclays would never have happened on a normal day because you're like, well, why is Barclays not opening? Why is Barclays not opening? And everybody in the trading floor shouts out. So you naturally go, oh God, it's not me, is it? And you check. But when every stock is in an extended auction,
because of volatility,
nobody even bats an eyelid. I'm amazed it was allowed out of auction after 5 minutes. I always thought that if it was more than a 10% move, you got an additional 5 minutes.
Right, okay, I didn't know that.
Yeah, 25%, I think there should have been an extended auction. If you work at the LSE, let us know what the rules are, because they do change quite often. Right. Fresnillo up 5. Interesting. That's nice little bounce there. Ocado 2.7. We were just talking about it. And Canal Plus, of course, it's not in any index, so it doesn't get whipped around by the big index moves. JD Sports, Andrew McKelvey, how are you in JD Sports for this week? Because that's been a stock to own. When was it last? At 75 pence, Mr. Cooper.
Let's have a look.
Back on April the 10th. Oh, No, I'm gone mad. That's a 10-minute one. We need a 4-hour chart. So if you've had your money in JD Sports, you can go back to, Monday the 24th of March. Oh, to go back to Monday the 24th of March. Wow.
Yeah.
I think my account looked a little bit better.
Yeah, I mean, no one would have predicted this.
Ian Holmes, that's a good point. What stocks? This is a great one to do, right? If you're a real spreadsheet geek, then we did it yesterday. We looked at all the stocks closing price on Wednesday, the 1st of April.
Yep.
And we looked at the closing price 2 nights ago, because we didn't think we were going to come off again yesterday. And that's again, has the economic and earnings story changed of Burberry Group? Yeah, it probably has. So that one doesn't count. Has it changed of Ocado? Not really. I don't see what, not to the degree that other stuff has. Mining stocks, yes, definitely. Those have changed. Marks and Spencers, probably not. So it's really good to go through the moves, exactly as Ian Holmes says, what hasn't fully recovered maybe from 2 weeks ago up to those levels, and is there a story earnings-wise?
Just out of interest, Rich, could we have a look at the client sentiment on the FTSE 100?
Yeah, let's do that.
Have a look at that.
Now, so I go to FTSE, which is this one, and client sentiment.
There we go. Is that 96% long? 66%, my eyesight is really bad. 66% long.
Yeah. Interesting.
Yeah. And in the last hour, 57% buys, and today 51% buys.
That's actually really useful. What else can we look at for that? S&P 500?
Yeah.
Can we have a look at that?
I'm going to have a little prediction.
Go on.
I'm going to go, given that, I'm going to go
Drum roll, please.
58% long on the S&P.
You think it'll be 58% long on the S&P?
What do you reckon?
I will go 71.
Okay.
Oh, you are good. Well done, Mini Cooper.
I said that because I thought it would be a bit less, just a bit less than the FTSE 100. If I hadn't have seen that FTSE 100, I would have guessed more what you guessed.
That surprises me. I wonder if that's hedges or hedges for gardeners. Right, okay, Mini Cooper, let's take us through your... you got a couple of things just on spreads and things like that. Really
so
useful.
First thing I just wanted to cover on briefly was all session stocks. So I'm trading off my phone as I've got a list. We added around 13 all session stocks on the 31st of March. For those of you who don't know what an all session stock is, it enables you to trade Monday to Thursday on leverage between 9 and 1. Okay, so 9 in the morning when the pre-market opens, which of course you'll be covering this morning, till 1 in the morning. Now, on Fridays, that is slightly different. It's from 9 in the morning until 10 at night on a Friday, which is when we close, okay? So it's really good, let's say with the US banks, as an example, who are reporting before the US market open at 2:30 today, where if you want, you can get in and out or out of a position. Now, just a few of those names, I'm just going to read out a few of the more popular. So Morgan Stanley, US banks, you'll be able to trade that in the pre-market today,
right?
Okay, before the US open at 2:30. So that was one of the main ones. Quantum computing and Rigetti computing. Yeah. We've seen a lot of volatility with respect to the quantum computing stocks, so we've added them. And then also AI stock, Big Bear AI Holdings, which not now, but around Jan-Feb time, it was one of our most popular traded stocks.
Okay.
Yeah, so we've got that as well.
Brilliant.
So that's all session stocks covered. But in addition to that, I just want to do a little bit on...
More importantly, I think this is really useful for anybody that has been trading on the platform this week, has found it hard. Give them this this tonic.
Yeah, so let's use Sunday night as an example. So our out of hours markets, we offer indices Sunday night. It opens at 11 o'clock, right? And at that point in time, we saw a huge pullback in the markets, right? Like seas of red everywhere. And clients use stop losses, right? And we have a normal stop loss and a guaranteed stop loss, okay? So normal stop losses are subject to something called slippage. And for those of you who don't know, slippage is the difference between where you set a stop and where it was actually executed at. Now, we can't always fill you at that level if the price never actually traded there. And this is particularly more common at the moment due to volatility in the markets. Now, usually we would see it, let's say if it was NFPs or CPI, as they would be one of the more volatile events. However, at the moment, let's say obviously we had CPI yesterday and it was better than expected. I'd argue it was more taken over by Trump and what he's going to say next, and that's what's going to cause the volatility in the markets. So one thing to note is if you do set a stop loss, given the volatility.
Should we get the screen up and just have a look at the way we do this? So let's say well, let's do it in one pound per point on the S&P 500, right?
Yeah. And then what you can do there is you see you have stop and you've got normal. Let's say you do a stop at I'll
do 52.75 on the order.
Exactly,
Okay.
yeah.
Stop. Normal.
Yeah, and there you've got normal and you've got a guaranteed. Now, the difference between the two is the normal stop, you are subject to slippage, where a guaranteed stop, you aren't. However, if a guaranteed stop is hit, then only if it's hit, then you'd have to pay a small premium. Normally it's around, on an index, it should be around 0.3%.
And so is that where it says minimum? How do we find out? So
Yeah, so
I'll say, right, stop, I want 50 points away.
yeah, so that's fine. You see the min points there is 4, okay?
Yeah.
Now, a guaranteed stop, it doesn't actually exist in the market. It's just something which we offer to our clients, and if it's hit,
Nice.
we charge. So only if it's hit, it'd be 0.3% usually on an index, right?
Okay.
That guaranteed stop minimum is decided by us. Now, it can be increased when there is anticipated increased volatility due to the fact that we're actually taking risk on it ourselves.
This just seems like too good to be true.
Yeah. So as an example, before CPI or before Trump, if Trump was going to talk with his big
board
tariff board, then that is likely to increase. However, you can still use it.
So you change the penalty.
Our trading desk would change how close you can put the stop, because if, as an example, let's say
If I'm doing it now, so basically over the weekend, right? I am worried that Sunday night we open down 4% again. I don't think we will,
Yeah.
but I'm worried we do.
Yeah.
So I can literally just put a sell order in now to sell £1 a point, right? And let's go to the deal ticket. So I go, £1 a point, shorting, stop is 50 points away, and I put a guaranteed stop of 53.47, and it only cost me 1 point.
So you'd be able to see how much it costs you. It should be, the under the on the eye. I can't see that from here.
1.2 points premium.
Yeah. However, if, as example, CPI or NFPs or Trump's going to talk, then that guaranteed.
But over the weekend, that's my worry.
That would increase that guaranteed minimum stop distance.
Yeah, but when I'm putting it on, it says 1, right? So that's done. You can't change that.
No, that can't change. No. It's just a distance can change, but that cost there won't change.
Okay, so I mean that's great for the clients. It's wonderful, because on a day like times like this, I would have imagined it would be much more, strenuous than that, like 10 points or something.
Yeah.
Because essentially, I can buy here, going into the weekend, knowing that you've got my back.
Yeah, it's a guaranteed stop loss. Yeah.
Brilliant. I understand why it's 1 point when the market's open because the S&P's never closed, right? But from Friday night at 10 until Sunday evening at 11, you guys have massive risk.
Yeah.
And I don't because I've got a guaranteed stop.
Yeah. If you use a guaranteed stop, it's fine.
God, I wish I'd had that last week. See, if you'd been on last Friday, you would have saved me a lot of money.
I was ill.
Well, your illness has cost me about £3,000.
I felt really bad, but I literally just couldn't come on. Like I couldn't work that day.
We'll forgive you. Good stuff. Right, we'll go. Let's go a quick 1 minute break, and we're going to come back with fast markets. It is now 8:20. Yes, so we've got ESAR in 10 minutes. We'll do a quick look, and Kate Murphy's asked us to look at Trainline. Are there any other stocks you'd like us to take a look at? With BP dropping now down 2.5%. We'll see you in one.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
I like that beat that we come in on fast markets. That has been many people's heart rhythm this week, just a little bit more elevated with what is going on in the markets. Chart up, we're going to have a look at Apple here. Mini Cooper is going to run us through what he thinks because look, we had the big move from last May. Do you remember when Apple started saying, oh yeah, we are the kings of AI. We're going to come out with, you know, your next iPhone is going to be able to cook for you and dance for you and all things great. And it was a complete lie. Complete and utter lie. Apple did not have the AI capability ready for them. It got up to a price of $256. Buffett selling, yours.
Yeah.
And now it's all coming to fruition. However, the tariffs really hurt them as well. The stocks
at Buffett though.
It didn't. Yeah, yeah. He's done great.
Yeah.
The stock's at 190. Mini Cooper. What do you think?
I mean, these tariffs which Trump has implemented on China, 125% at the moment, not good for Apple.
145.
Sorry, 145.
Yeah.
Sorry.
Oh, hang on. Let me check.
Well, I've got
165, 185,
185.
250.
Bloody hell.
It's whatever he makes up in a minute.
So what was I saying? Yeah, so a lot of Apple's production is in China. Okay. Now, with this, I think with Apple, it depends on how long these tariffs last, particularly on China.
Yeah.
In addition to that, are Apple able to move production elsewhere, such as, let's say, India, as an example? If not,
I think they started doing.
Yeah, I've read they've started doing. However, of course, there is a time lag.
Yeah,
there is a time lag. It takes time to set up these factories, but obviously Trump doesn't take that into account. Even with car manufacturers in the US itself, it's not going to be.
Let's look at this, you know, more as if, what if a deal is done, right? The way that these two are going, we know that Trump wants to make a deal. They've said we want to make a deal with China.
Yeah.
China don't know how to. Let's say there's something to be done and tariffs are only 20%, right? And that announcement comes out on Tuesday, Wednesday. What's Apple? What price is the right price for Apple?
When you mean 20%, you mean for China?
It's only China, yeah, exactly.
Only China. Well,
which is nothing really.
Yeah. In the grand scheme of things, that'd be positive, of course.
Yeah. So
for Apple.
what price is this thing?
I mean, how much, I'll be honest, I wouldn't be able to have them.
Well, the vol currently, a 2-week April option, right? Because the numbers are May the 1st. So an April weekly on the 25th. The vol's trading at 70 and the expected move is 17. 17 is 9% move in Apple. Where can we sell a put? The 160 level. If you're interested in buying Apple at 160, you can receive $2 for that. So let's just set up this trade. Am I happy to buy Apple? Am I happy?
Apple
At 160? Well, if you pay me $2, I might be happy. And then I use that for the upside, buying 200. I don't think it's going back to the highs again, so I would sell 2 of the 220s, and that takes me up to paying $1.29. Right, I'm paying $1.29 for $20 of upside on Apple at realistic levels. That is the trade if you think that Trump does a deal, because he is the king of the deal apparently, and
apparently
we see Apple up 10% in as much as 2 weeks. So that's max profit 1,870, costs you $129 to put on, and your BP effect, buying power effect's 2,300. So about a 80% return in 2 weeks on your investment. But you've got the risk that you have to own Apple at $160. Or if it goes through 220.
I'm just not convinced Trump is going to do a deal. I'm not sure why. I think maybe it's his ego.
Right. Well, shall we have a look at the other side then?
Let's have a look.
What do you think Apple can get down to? The expected move is 8%. So
let's say down 10%.
You think Apple can go down 10%?
In how long? Did you use 2 weeks? Yeah,
so there's no deal in 2 weeks, right? No Edmonds.
I mean,
no deal.
Deal or no deal. I mean, really, it just depends on what Trump says and when. Yeah, let's say 10. Let's say 15% even.
15%.
Because you just don't know what he's going to say.
So that is about 160, right? So if you think it can get to 160, do we want to buy something at like the 180? Buy a put at 180, right? So that's 5% lower. And then, yeah, you think it can get to 160, so we sell that one. $20 the downside, and it costs you $3.
Not bad.
You prefer that one?
Yeah.
So that is max profit of 1,600, max loss is 330. Not bad, Mini Cooper, not bad.
But yeah, with this,
Could it go down more?
Yeah, I mean, anything could happen. I think with Trump, like you know, one of the things.
It's still Apple.
Yeah, I know it is, but we've, like the other day, you wouldn't expect S&P to just get absolutely hammered and all the other indexes like they did. Like you just wouldn't have expected that. So you just never know.
All right, I tell you what, if we don't need to look at it for 2 weeks for that kind of trade. Let's look at further out. Let's look at Tom Sosnoff's 45 days away. Now 35 days till May expiry. Yeah, let's look at May expiry. Can we get a better deal? We'll pay $8 for the 180 puts, and if we go as far as 145, would I be happy selling 2 of them? At 60 volt, I probably am. So then suddenly you can get 180 to 145, and you can see then it's going to cost me, $3 again, which is a max profit of 3,100 and a BP effect of 2,000. But if I don't think it's going back up to 225, I can sell the 225 call. Bit more of a bearish strategy, but it brings the cost down to 220.
Yeah.
For Yeah, decent upside. There's a lot to do. The opportunities, if you are sitting there with powder dry at the moment, right? If you're sitting there and you've got through all of this without losing a single dollar, bloody well done. You're certainly better than I am. But there are opportunities, right? There are some real opportunities at Vol, because if we look at the IV rank on Apple is 83. 83. Right, chart off, please, guys. I did promise train line, and we've got BAE to look at as well. Any thoughts on BAE?
Not particularly. I don't follow BAE systems that much. And what about yourself?
Yeah, we have a little play in it.
Yeah.
Every now and again, little play. S&P futures down to 52.90. So we have come off the highs. Remember, people do not want to go into this weekend and have a stressful weekend like they did.
Yeah.
So there's going to be an allergy to taking risks today.
Yeah.
And for me, that means with no announcement, we finish about 5,240, 5,250. And sorry, Minnie. I think today the market could be unchanged, completely unchanged. So that, 5,250, 60, something like that.
Yeah. What I was going to say is just to basically manage risk, ensure you've got enough funds on the account. As an example, I'm using the example of a retail client here. You're in margin call when equity is less than 100%, but you're actually closed out if equity gets to less than 50% of margin.
Knowing that difference between equity and available is huge, isn't
it? Which you can see at the top of the web trading platform.
Right, here's Trainline. So Kate asked us to have a look at this. There was concerns around the government getting involved, and that's why we've seen the sell-off this year. So government getting involved as in having their own ticketing agency. I think that was the story, wasn't it? And that's where we've seen it's been carted, hasn't it? And then of course with risk off as well. Trainline 278. Not sure Trump tariffs affect Trainline that badly.
No, what was that then? So I think I missed that story. So the government are looking at introducing like their own ticketing.
I think that was the story. I'm not 100% in it, but I'm sure the guys will remind us.
Because at the moment, I always use Trainline to book train tickets. I've got my 16 to 25.
Where do you go?
Where do I go? I go Cambridge quite a lot to see my grandparents.
Ah, nice.
Yeah, so that's normally where I use it. Where you get
give them a shout out. Send them in the video later.
Shout out to Nana and Dar.
Yeah, so it's just a great service. I always use Trainline if I'm going up to Scotland, up to Cheltenham, across to Bristol. So there we go. Share buyback program of £75 million. This is from the start of March. Peel Hunt said that revenue growth was slower due to lower monetization potential of on-the-day tickets. Yeah.
I noticed with Trainline, they always charge a small booking fee, which is what I assume is how they make most of their money.
Yeah, like a
30p or 50p or on like a 20 quid ticket.
See, that's it. They could stick that up a little bit. Maybe
I would say that.
Okay, right. That's tell you what, we're going to say thank you very much to our good friend, our champion of the show, Mini Cooper. Mini Cooper, should people like and subscribe the YouTube channel?
100%. And there, of course, there is a difference because we've got the new one now, right?
Sell it, baby. Go on.
So for those of you who don't know, we've got the new YouTube channel. So please do ensure that you subscribe to that one and not to the old one.
And how do they find the new YouTube channel, Mini Cooper?
Just Trade Live with IG and YouTube.
At Trade Live IG.
Sorry, I missed that at.
At Trade Live IG. If you don't have comments from David Boyce, Arthur Fox Haig, Ian Holmes, Daniel Vermeer, if you do not have comments in the side chat, means you're on the wrong chat, right? If you are in the wrong room, you need to go to at Trade Live IG because we're going to switch it off soon.
And the new one along the top has a picture of like 6 or 7 of us with you in the middle. So that's another thing to look out for.
With the live on air. Okay. Great. We'll go to a break. Isar's coming back. Have a wonderful weekend, sir.
Thank you very much.
What's the plan?
Friday night, I'm going out with my mates. Well, tonight, I'm going out with my mates from uni.
Where should everybody avoid tonight?
Mercato and Borough.
Where?
You know Mercato in Borough?
No.
You know there's
Borough
like
Market.
Yeah, there's like a Mercato in Mayfair and there's one in Borough. Bigger ones in Borough, but they're going to close down the one in Borough soon. It's like loads of little like food stalls with drinks.
This is the loudest shouts from everybody in the gallery saying, "No, I can't believe they're closing."
Yeah, they're building. I think it's a hotel, so it's going to close very, very soon. So we're going to go there.
And what is it? It's a kind of pub with music, or?
No, so it's like it's just like loads of like food stalls and drinks basically, and you've got an indoor bit and you've got an outdoor bit, and of course it's going to be 22 degrees tonight, so we're going the outdoor bit.
Brilliant.
Hottest day of the year. Saturday, I'm gonna relax, and then Sunday I'm going to Lord's because we've got our premium client event where clients that come in, they get to meet some of the players and look at the media room at Lord's and have some food. So it should be good. So I'm working Sunday.
Working?
Yeah.
I'm sorry, you're not saying that going to Lord's to meet cricket players and have drinks is work?
If you're free Sunday, come along.
Sorry, I'm washing my hair. We'll see you in 2. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Isar, talk some sense into it, my friend.
What, to markets right now? I don't think there's any sense to be had about it.
No sense in markets, but what about participants and their view, their like
I think
panic? What's going on?
I think there's basically 3 things that are going on in parallel. Like, thing number 1 is you have the event uncertainty around the tariffs, but in particular, like there's a big question to me that's been unresolved, which is, so you've got this pause in everyone except China, basically. And the question is that going to genuinely be a 90-day pause, or are we actually just binning off the tariffs for everyone except China? And I think the market is kind of assuming the latter.
Yeah.
Which I think is probably true, but if it's not true, then in 90 days we're going to get another shock. And like, I just really, really think they know that that's a really bad situation to get to. And so what we should expect in the next kind of whatever, 3 months, is to start seeing deals get signed.
Yes.
And like, I think to me, every week between now and the end of the 90 days where deals are not signed is a week of like slightly angsty like event risk. So I think that's like thing number one that's going on in the market. Thing number two that's going on, sorry. Yeah.
So let's talk about how, not yet, but at some point, how you get used to that fear, how fear and event risk almost becomes normal, and therefore people get position sizes down, people get risk down, and then...
Yeah, so I mean, you trade differently, right? So like in an options context, you tend to probably maybe use defined risk more than you would normally. If you're in a kind of like CFD like world or spread betting world, you might trade slightly tighter stop losses or down position size or both. You might see in the actual market itself different pricing of assets. So for example,
the psychology of it, it's like if I come up and slap you, right, you get a shock and you're upset.
Yeah.
If I come and slap
so I think
you
this
every
is
single day,
you start to prepare for the slap, right?
Yeah. And by day 20,
you're slapping back.
you say, "Morning, Rich."
Yeah. So I think that's the second thing that's going on in markets, which is people are trying to recalibrate to this new normal. And that is actually a really non-trivial process to happen, and it doesn't happen overnight. And so actually you've got, for example, like the dip buying mentality is still very much there in retail. You're seeing a lot of people...
Wednesday showed us.
Yeah, which...
In worrying size.
Sure, exactly, right, in extremely large size. And actually it's not clear that that's wrong yet, actually, but it doesn't look as much of a surefire decision as it maybe would have like 3, 6, 12 months ago. And so I think training new behavior takes a lot of time. We talk a lot in psychology about like, if you're trying to learn something new, you have to do spaced repetition or you have to do habit formation. And it typically takes you between like 7 and 11 times to do something before like it really becomes habitualized.
Yeah.
And like, I mean, the market's been whacked, what, 4 times in the last maybe like 10 trading days, maybe 5 times. So like, actually, we're starting to build the habit of realizing, okay,
of getting smashed.
Yeah, exactly. We're just like starting to get more used
it's
to
like me ordering alcohol-free beer when I go into a bar.
Yeah.
I've done it. Well, I have had a glass of wine now. So I managed to get to 2 weeks. Absolutely no alcohol. Had a glass of wine, but for me, that's...
What's your go-to alcohol-free beer? Are you like a Guinness Zero, or are you like a Lucky Saint, or like,
I like Guinness Zero. I like, Corona.
Corona Zero,
I was in the Sydney Arms to watch the Grand National, and I had 2 Corona, and
so I think
I've never known the difference.
I think for lager, it does make a difference, honestly, in my view. But I think for Guinness, you do tend to taste and see the difference. So I don't know. I'm also kind of on the 0% beer train. But sorry, if we go back. So I think as we look at that kind of consumer behavior, that retail behavior in the investing landscape, I'm not sure the new normal is fully embedded yet. So just before the show went live, we were talking about one of the people who's in like our little trading club.
We've got a group chat, and we've got a colleague of ours who is a wonderful chap, and he's absolutely smashed it this year on one stock in particular.
Yeah.
But we were talking about another stock yesterday, and it was even the volume of messages he was sending was this: I don't understand why this isn't happening.
Yeah. And so I think there's almost like a mix of confusion at the market moves and almost like frustration and disbelief almost, right? Which is like this thing that has worked for a really long time is not working at the moment. And you don't know, is that temporary or is that persistent? And in the same way that like markets can be irrational upwards, they can also be irrational downwards.
Absolutely.
And like being a bit more comfortable with that lack of a strong directional bias. Like we've had 2 years of 20+% returns, and like it takes a while to get out of that mindset if we're not going to be there anymore.
Yeah. And we're trading at 5,300.
Yeah,
we're not trading at 4,500.
Exactly. Yeah, I saw a tweet, I think it was a few days ago, which was like, okay, markets are down, but it's not like we're trading at crazy cheap multiples, right?
Which takes me on to this. Now, our colleague was, ranting about Nvidia.
Yeah.
And the earnings expectations of Nvidia.
And I think he made the reasonable point, right? Which is that if you believe the forward earnings projections, then actually it's not being priced at that rich a level, and it's growing at an insane level.
But I think that's what I wanted to get across, is that these earnings estimates are gone.
Yeah.
Right? Decisions are getting made every single day at the moment, which are reducing the profits, the revenues, increasing margins. Do not believe what a broker wrote or what a management told you a month ago, 6 weeks ago.
And
Stuff
also
changes so quickly.
And a lot of those like recommendations from brokers or from like equity desks are like really lagging, right? They look at information, like they get released not that frequently. They look at information that is largely backward looking or largely management's projections of forward looking.
And research analysts are terrible at believing what a company says and being bullish because they want to get the mandate from the company for their bank. Right?
Yeah, I think a while ago you had Martin on the show, and you did like a deep dive in how a lot of these reports get written, and it's a world that I think people take their outputs from without thinking of how the inputs get made. And like, I'm not saying that they're all bad, and actually there's lots of really insightful stuff that you read in those reports because those people have access.
Yeah.
But that access doesn't come for free, and it doesn't come without a specific approach, right? That I think most investors or traders actually don't necessarily have the full like inward view of what that actually looks like.
Right, the chaps are determined to leave this up on screen.
But I think this is a good shot, right? Yeah.
So now this is revenues, I think. Let me get the earnings up. Yeah, that's revenues. So this is the more important one. Now, 25, we've seen drop so far. Goldman's have cut from 13% to 7%.
And sorry, just explain what are the 3 lines?
So the 3 lines here, that is where Eddie Yardeni thinks the S&P earnings, EPS, will be coming in at 260.
And so the reason that's really important is because we were just talking about price to earnings ratio. So if your multiple stays stable, then changes in earnings will drive changes in price. And then as your multiple also compresses or changes, then you actually have kind of potentially amplified effects. And so basically any correction can either be a multiple contraction or an earnings contraction, or both.
Or both.
Yeah.
Boom. And that
both is bad. Yeah.
Pain really takes place, right? That's why you're seeing these 20% moves down in stocks. Now, we had 246 last year.
And by the way, there was a trend in a lot of recent earnings forecasts where as companies are growing and as the stocks are bullish, but they're not growing as much as the stocks are increasing, what happens is you take this year's earnings and you say, okay, well, this year's earnings are going to be good, but they might not be quite as good as we thought. But don't worry, because next year's earnings are going to be amazing. And you start pushing those earnings a little bit into the future. And actually, as that happens, that's where you start to see that massive multiple expansion that we saw over the last 2 years.
And that's what you see here, 2026, 300. Dream on, people. Dream on that we're getting $300 of EPS.
That's a really material increase in earnings expected, right?
It was $100 in 2012. It was $200 in 2021. And we're expecting earnings to have grown by 50% from 2021 to 2020.
By the way, I love that this is a logarithmic chart. It's one of those things that log charts are like a straight line on a log chart means the percent increase is stable. That's like how that's why it's useful to think about like log charts.
Yeah.
But I think when people are reading this, they might not see, but actually the gap between that purple line and the orange line is almost the size of the like first two dotted lines you have at the bottom, because you're going from almost 250 to almost to basically bang on 300.
But if we're looking at the absolute shit show that's going on at the moment, why on earth do we think that earnings are going to be higher than they were last year when we were in a stable economy?
Well, I guess the idea is that a lot of earnings is us kind of baked in already. So for example, if you're a stock like Nvidia, that's a very simple example. You have a backlog of orders. And so actually there's a degree of stability in what you think you might be able to kind of project into the future. That being said, like, you can cancel orders, and like some of the macro things that we're talking about over the last couple of months, I think are not yet fully reflected in some of these earnings forecasts. And to be honest, that's because people don't know where is this stuff going to land. Like if like tariffs were there, now they're paused. Tariffs on China were like one level, now they've been increased. It's not clear whether there's going to be a deal there or not a deal there. It's not clear how companies can even plan for like whether they should move manufacturing or not.
Yeah, that's because it. Amazon just cancelling orders, right?
So I think basically it's very hard to project earnings effectively in that environment. And actually we have seen like not super weak jobs data. And so there's like reasons to believe the consumer might continue to be strong. So you can kind of like just about piece together enough arguments for why that number hasn't changed too much.
Yeah.
But I think the risk is probably definitely on the downside rather than the upside.
And then what do we take that 200, okay, it's probably between 230 and 260, right? That is, we can be pretty high assumption about that. But what do we multiply it by to get the S&P 500? Chart up, please, guys.
Well, that's the big question, right?
This, and you can see here what happened in 2020, and you can see what arbitrary amounts there are.
Wow.
Now, forget this, because that was the depths of 2022.
Yeah, and also a period of time, by the way, where we had double whammies of where price was whacked and earnings were actually quite strong in retrospect. Yeah. And so actually the price to earnings ratio had like a particularly sharp move. Yeah. But actually, if you look where we are now, I mean,
well, yeah, so
this is S&P presumably, right? Like
exactly.
Yeah. So this isn't even the NASDAQ, which is even higher, right?
But take us through the reasoning between being at 19 or being at 23.
Yeah, so I mean, the historical long-term average of price to earnings are somewhere between the 14 to 16 range. So we are a little bit elevated versus the kind of 50-year, 60-year timeline. Yeah, you can see, like, look, we spent ages floating around between the kind of 10 to 16 corridor. Yeah. And then, to be fair, there has been a material shift in the makeup of our economy, which has generated more growth.
And the makeup of the index.
Agree, yeah, exactly, and the makeup of the index. And so you've seen a skew more towards growth companies and towards tech companies. And so as earnings expectations for the future get higher, and as growth expectations for the future get higher, it's very rational to price in higher price to earnings ratios. And so that's why you've seen this kind of general trend up over time. Now the question is a price to earnings ratio between 20 and 22 sustainable? And is that then manifested in the actual earnings? And I think if you look at the last 2 years, that's where we've seen this really, really accelerated increase. And like your 20 plus, exactly, right? And your 20+% returns are driven by trends like the recovery from the 2023 period, strong consumer growth, AI, and a lot of these kind of hype cycles. And the question is,
hype cycles, I like it.
I mean, that's the reality, right? And like, we haven't yet seen some of those AI like trends manifest in really strong earnings yet, with the exception of some companies like Nvidia. We haven't seen, for example, Microsoft, one of the biggest hyperscalers, make that much money from it. They've made money in cloud, but they haven't made money on the actual use case or application layer. So if you imagine you've got kind of AI infrastructure that's from your ASML style companies all the way up to your like chip manufacturers. Then you have your cloud providers and hyperscalers who provide the kind of compute. And then you have your model generators and your application layer. We've not seen model makers or application layer people, often who are the same people, by the way, make any money from this basically so far. Like ChatGPT is the most successful product, and they lose
about the internet.
Sure, but during a period like where, like zoom out, you can see the internet in that chart actually, right? I don't
think it goes back that far.
Okay, fine. So I think what you saw in the early 2000s was a massive explosion in price to earnings as people started to price in a bunch of growth. And then the reality of that
like
growth,
30, 40 times earnings,
which is much higher than where we are now, and so we should keep that.
This is still realistic.
This is not totally insane.
Yeah.
And like I think when we think about like the longer scale of history, do I think a price to earnings of 20 is so expensive I wouldn't have any money in the market? I think no. But would I be a bit cautious there versus at an 18? Probably. And so, yeah, so I think generally the makeup has changed. Expectations of earnings growth is high. And so the question is, as some of those things start to cool off, do we start to see like the Mag 7 might be a smaller percentage of the S&P in the future, right? If that is true, does that mean price to earnings should come down because of a structural makeup question? Are we seeing their earnings actually materialize? If they're not materializing, does that mean that actually we have to also project their forward earnings to be lower? And so we were in a cycle where current earnings were lower than they would have been projected a year ago, and so and then expectations of forward earnings were increased. So you'll say, okay, you're not growing now, but we do believe you'll grow in the future. Now, what would be a disaster is if current earnings start to go down and expectations of forward earnings start to go down.
Right, and that's where we are on this. That's you're talking about the 300 number, right? That 300 number for me is fantasy to begin with, because we're talking about going from 260 in the Trump distorted world, right? That's them saying this economy is screwed this year, but companies can still make 7-8% more than they did last year. However, next year, wow,
look at that growth.
The chickens come home to roost next year.
Well, but here's the question, right? So if the purple number stays where it is, but the orange number starts to come down, then your projections of growth are going to get worse, and then your price to earnings starts to look a bit rich.
So let's start to put sense into this, right? What is that orange number? What's that? What's the earnings number for 2026?
So I mean,
it's at 300.
So
Let's
so
be
if it's at 300 and you have a PE of 20,
let's say it's not at 300.
Okay, I mean, I think a reasonable scenario might be 270, 260.
Okay,
because that's
multiple.
At, let's say, a slightly lower multiple than where we're at now, so maybe 19. I think.
So that, how do you put that?
This, by the way, is my dad's favorite game. He plays this at home all the time. It's like, okay, what do I think the earnings number will be? What do I think the multiple number?
This is how I form my market
He spends hours and hours doing this stuff. And so if you're wondering how I got interested in markets, it's basically my dad.
Right.
Yeah.
Now,
are you doing the math?
Would you call that base case?
I think that is what I think is a reasonable base case. Yeah.
5,130. Exactly where we bottomed yesterday.
Yeah, right.
So I think that is a base case.
And you know what? Market's pretty efficient. Like, am I surprised that that's where it's landing at the moment? Not crazy, right? Like,
but how bad do we have to get before we're at 4,800?
Okay, so 4,800, you're likely to see both earnings contraction and PE contraction.
But a PE contraction, you know, if things get that bad, rates are coming down, which means in theory you meant to expand the multiple.
You know, discount by less, right?
Yeah.
In theory, yes, but like multiples are also a function of fear and greed. And if we're in a scenario where the Fed is drastically cutting, I'm not sure people are going to feel super bullish at the moment. And actually, what a great time to have been owning bonds, where suddenly you'll see a massive capital appreciation in
Nobody wants
your
them.
bonds. Exactly, right? So, but I mean, worth thinking about is if you think that's the base case, or if you think that's a reasonably likely case, is equities really the place you want to be, or is bonds maybe the place you want to be?
True. Now, I have to be responsible and warn you, you've got a meeting in 30 seconds.
Okay, fine. Week ahead.
Do
should I?
you want to come back?
No, I can run. I think I can run through it in 30 seconds.
Okay, go.
Right, so macro for this week is actually relatively quiet from the news front. The big news to me is going to be stuff to do with tariffs. So are we starting to see deals being cut? We have some Fed speeches. So we have Barkin, Bostich, and Hammock on Monday, Tuesday, and Thursday. We have UK CPI, we have China GDP, and we have Bank of Japan's trade balance of trade.
China GDP, that'll be a clean number, won't it?
Yeah, of course, we can totally trust that number. But it will be a useful input, especially because potentially China is dumping bonds.
What's the biggest moment of the week?
I think it's probably earnings. So we have Bank of America, Citi, IBKR on Monday. We have Blackstone and Schwab on the 17th, Thursday. We have ASML, Netflix, midweek. We have Johnson & Johnson. So I think I'm looking at tariff news and earnings news more than macro data points.
One stock that you're keeping an eye on and thinking,
do you want to know what the real answer is? I'm looking at long-term treasuries. It's like the area that I'm looking.
30-year.
30-year treasuries, yeah.
Or TLT.
Yeah, well, exactly, TLT, yeah.
Because you don't...
China is dumping, is what it looks like. And actually, you know what? China can dump all they want, but I kind of back the US to pay its debt.
And he just won't be allowed to.
Just look at that decline, right? It's crazy.
This is when
and it's a good hedge, right? Like,
if we think the economy is slowing, this is your thing.
Yeah, and like here's the reality, right? I might be totally wrong, which is tariffs might generate loads of increases in prices, and then suddenly TLT gets hammered. But I don't know. I think the risk reward here for me is not bad.
Okay. You get inflation from tariffs,
yeah,
but your earnings are slowing, your unemployment starts to creep up. What's Powell's answer?
I think cry in a corner and hope he doesn't get fired, right? Like,
do you cut or do you raise? Inflation or unemployment?
I think at the moment the balance is more weighted towards inflation, and I think as you look to some of those inflation expectation surveys, disaster for Powell is unanchored expectations, and up until now, inflation expectations have remained pretty well anchored. Mm-hmm. And actually, you're starting to see some of those surveys tick up in a way that, if I was Jay Powell, that would probably keep me up at night.
Yeah.
But like you said last week, it's just a job for him, so I'm sure he's not.
Yeah, he did.
I'm sure he's not too fussed about
That's
it.
how he must be feeling just now. So all that together, Isar has just answered why we're seeing money flow into gold.
Yeah.
Right, because you're worried about bonds, not because of the ability to pay, but because of inflation. You're worried about equities because you're getting that slowdown in economic growth, not just for this year, but potentially for next year. So you don't know what multiple, you don't know what earnings.
Yeah, a lot of other commodities are getting hammered. You don't want to buy copper here, you don't want to buy oil here. And so where are they going?
Gold's the only thing, right?
Yeah. On that note,
I've
got a dash.
You do. 9:02. Feel free to run out. We're going to go straight into all sessions.
Thank you, everyone.
Isar, have a wonderful weekend. Thank you very much. And we'll go to seeing that there is some blue on the screen. You'll be happy to know. Cheers.
Cheers.
Have a good weekend, pal. Right, American Airlines up 1.8. United Airlines up 1.2. There's not too much else up on the day, I'm afraid, more than your sort of 30, 40 basis points. I don't know if I even want to look. Shall we look at what's down? Or shall we ignore it? Shall we just put our head in the sand? Come on, what's down on the day? Oh, all right. It's not that bad. Phew. Exactly the one that we've been looking at. Do you agree with Isar that this is the time to buy TLT? I tell you what, if Trump does a deal with China, and all the pressure is alleviated off the bonds, because for two reasons. First of all, lower tariffs equals less chance of inflation. We saw a really low CPI print yesterday. So you've got low inflation coming through the system. You've got a slowing rather than a recession. TLT does start to look really interesting there because you can start to take interest rates down and that 20-year yield can come off as well. what else do we got? Caterpillar, small down. Everything's kind of small down. Is there any big movers out there? Not really. Nothing exciting, people, is there? Nothing exciting there. Let's take a look at how futures are doing. Futures are, let me get this for you. And then I've got futures 52.71. This, so my big call of the day, right? My play of the day is that everybody is effing exhausted, right? Absolutely exhausted. If you were going to panic, you panicked yesterday at 6 p.m. 5:30, 6 p.m. I did. I'm sure others did as well. Not Waka Waka. Waka Waka was in there buying the futures, right? But if you panicked, you were going to panic, and that means you'd be paying up vol. Vol spiked. If people have closed their short vol positions, right, what happens the next day? Vol is zero. Markets don't move. Markets are unchanged. That's why I think, without, of course, the likelihood of a headline, some stupid story, right? If there's no headline, if there's nothing around today, yes, we get markets, futures going up and down, but this kind of move of 0.3 up to 0.3 down, or just zero, means that everybody who's bought vol smashed, and the market finds your pain point. And with volatility at 30, right, people are long vol and they'll get crushed on a zero move. So that's, you know, in the past, when people are exhausted, they don't put on risk. They don't want it. They've already sold their positions. So you tend to get a bit of a flat market on a Friday after a week like this. Now, how do you take advantage of that if you think McDonald's might have something there? Well, it's simply to sell the straddle, because the straddle is 63 points. So do you know what? I'm going to do it in small size just to put my money where my mouth is. 0.5, no, that's 50. What am I doing? 0.05. 0.05, I will sell the 52.85 calls taken in 67 points and puts and 0.05 of the calls at 63. So what is 63 and 67? That gives us a grand total of 130 points. I think the move is pretty much zero, and I've just sold the market moving up to 130, up or down. Right, so my break-evens are 51.50 and 54.40. God, I started to talk myself into doing it in bigger size. Is that right? 80, 130, no, 54.10. 5,410 to 5,150, I make money. On a Friday where everybody's exhausted, unless Trump gives way, and to be honest, if Trump gives way and the market is suddenly at 5,450, then I'll take the 40-point loss on a fiver, a point, and just be happy that the world is a better place and all you lot are more wealthy. We had a question earlier on about Aston Martin, and I must say, must be Scottish. Daniel, I think the fact of being Scottish means that I don't like paying up for things, and I much prefer the idea, right, I can have a 130-point move, and every minute that the day goes past that we haven't had a movement, somebody's paying me money. That's what it was. Trump's watching the golf. That's exactly right, Monkey Man, where we all should be this weekend. Aston Martin, somebody asked me about the beautiful thing, the most beautiful cars in the world. And, but there's not a beautiful stock, is it? That is brutal. Absolutely brutal. 61 pence. Unfortunately, it's been brutal since the very minute it IPO'd. I I was the autos trader at Macquarie at the time. So it was 2019. Look at that. I don't think you can see the right-hand side of my screen. Relative to where it is now, Aston Martin has gone down from 7,300 to 60 pence. Is that right? What does that mean? No way. It is gone. I can't even work out if 60 pence is 60, right? Then obviously it's 0.6. So it's 0.7300. That can't be £7,000. No, divide by. Somebody work this out for me. If this is showing 7,000, Aston Martin's dropped down from 7,000. Is that £700? 70 pounds down to 60 pence. The equivalent, because it's done so many rights issues and everything, Aston Martin IPO'd at £70, 70, and is now trading at 60 pence. My God, yeah, it was £19 at IPO, baby grand, but they've done so many dilutions of the capital that now puts it up to 70 pounds. 70 pounds, and now 60 pence. So it's lost, is that 99% or is it 99.9%? You do the math, people. Right, we're going to go to a quick break. I'll come back with, you guys tell me what you want to do. Do you want to do a little bit of market measures? I think it's probably a little bit late in the week to be trying to teach and to try and take in information. So I don't think market measures are the right. Why don't you drop me a load of comments into the chat room and let's just talk about the week that's been, right? Have you suffered pain? Believe me, you are not alone, right? The community here is for people to talk, and I'm not talking about, loss porn, talking about how big your losses were. But, please feel free. This is an open chat room. Tell us how your emotions have gone through this week. I know I'm exhausted, and it's a pleasure to do the show. But my goodness, watching the market come off yesterday, watching it spike up in our faces on Wednesday, it's really tough to follow everything and try and be on top of things. So yeah, drop that stuff. There we go. There's the poll. What do you want to see? A live Q&A, market measures, or an early bedtime? Very good. We'll be back. Give me 3 minutes. I'll go and get myself another coffee, and we'll be back to chat about what on earth is going in. Maturin sums it up nicely. Pain in the SIP, profit in the trading account. I think I'm pain in the SIP and a little bit of pain in the trading account as well. So well done, Maturin. We'll see you in 3 minutes.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
Well, who's this I have sitting next to me? Any guesses? This is producer Phil, ladies and gentlemen.
Hello, everyone.
Now, as of yesterday, our official new producer. Congratulations.
Thank you very much. What have I signed myself up for?
You really didn't think you'd end up on air today, did you?
I didn't, but I could see you struggling. I'm not sorry for you.
Oh, mate, it is very much appreciated. We decided to turn this into confirm and send, right? We've got some great questions in there. I've been sent some questions. I've also been sent a picture of where a certain person is watching this show from right now.
Birmingham?
So I got to say, Katie, you didn't think you were getting away with it, did you? Showing off. So that is Katie's view right now watching the show. She's asked for subtitles because she doesn't understand the Scottish accent. Is that possible?
Probably low on the priority list, if I'm honest.
Good stuff, right. Okay, so get your questions in. Phil is question master. And let's kick off.
Lovely. So we have, we'll start with our Texena. He wants to have a better understanding. Excuse me.
The one and only.
One and only. She wants to get a better understanding about Treasury and bonds. So where would probably be the best place to start if you wanted to start looking at Treasury and bonds?
Well, it's a very, very good question. I guess, look, let's do a real quick and sort of quick and nasty, right? US Treasuries are the way the government funds its spending and its deficit and previous deficits, right? So very simply, it has to go into the market and it has to sell bonds to, let's say I am US government, you are Joe Punter sitting in Michigan.
Lovely.
And you've got a whole heap of cash.
Even lovelier.
I need to lure that cash away from you by offering you an interest rate.
Okay.
And I'm never going to default because I'm the US government. So it's risk-free.
Okay.
What interest rate can I lure your cash away from you to pay for my my spending habits?
Do I get to negotiate, or is this one-way traffic?
That's exactly it. That's the market price, right? The market price of treasuries is the negotiation. And we can see at the moment that negotiation is sitting at 4.42% for, that's chart up, sorry guys, for 10 years, the US government is going to pay me 4.42%. And that's all done in an auction, right? Now, the Bank of England was meant to be selling some debt next week, and it's pulled it because it's worried about market conditions. It was going to sell some 10-year, I think, and instead it sold it for 2 years. Now, that's the other great thing I've got, and the great thing that Janet Yellen had is that she had the opportunity to sell debt because, of course, if you lock in for 10 years,
Yeah.
I've got that money in my budget for 10 years.
Congratulations.
Thank you very much. That's it. I can go spending. But if I think interest rates are especially high at that point, just like mortgage, probably only lock it in for 2 years and then refinance in 2 years' time.
Okay. So yeah, it's like if there's a rate that you think that's too good to be true, or too good for the certain market conditions, I'll take that. I'll lock in.
And if it's 0.8%, right? My brother-in-law that worked for the council took on 20 million of funding even though their surplus, their budget deficit was tiny.
Yeah.
He's like, 20 million of funding at 0.8%. This is a no-brainer. Done. I'll take it. And even put it in the bank, or try and earn 1% on it somewhere, and you're making money from taking on debt. Right?
Gotcha.
So that's the treasuries at the moment. The situation is they need to refinance $10 trillion this very year because Janet Yellen did too many short-term agreements. And now she's got to come back to the market and she's got to, now it's Scott Bessent and he has to decide, right, do I do more long-term debt at 4.9 or do I do short-term debt at 3.8?
How did you do the lower graphic? That was quick, wasn't it?
So that's all about whether you, what your expectations are of interest rates in the future.
Gotcha.
And that's treasuries. Now, of course, the higher the interest rate for 10 years, the lower the price of the bond.
Yeah.
Because I'm giving you 4.42% at the moment for 10 years.
Thank you very much.
So that means I get less money from you in the first place.
Okay. Well, hopefully that answers your question, R6 Senna. Next one we'll look at is we'll do Baby Grand. So when we hear from economists that treasuries are pricing in 1, 2, 3 cuts for the year, how do you see that from treasuries?
Brilliant. Right. Okay. Great.
And you've got the graphic working. Well done, guys. There we go.
Oh, great questions. Right. For that, we go on to a tool called FedWatch.
Here we go. We haven't seen this before.
Right. This is CME Group Markets Interest Rates FedWatch tool. But you can just Google FedWatch rates. Now, I'm going to December the 10th because that's year-end expectations. And the year-end expectations for rate cuts, what we do is we look at, let's just do current at the moment. There we go, that's better. So currently, we know that current interest rates are 4.25 to 4.5%. That's on this side. Then you've got percentage chances for 1 cut, 2 cuts, 3 cuts, 4 cuts, 5 cuts, and 6 cuts. My God, if we get 6 cuts, what on earth's going on in the world? And you get to do that for every month. So at the top, we can look at May. What's the chances of a rate cut in May? It actually doesn't look like it's going to happen. What's the rate cut percentage of a rate cut in June? It does look like it's going to happen. So that's where we are at the moment. FedWatch is a great tool.
Lovely. And I've put that in the chat if people haven't got it before, so you can use that.
You're good at this, aren't you?
Yeah, I'm learning, and we go along. So, I mean, this is obviously a bit subjective, so we'll go for Waka Waka. But do we see the market bottoming for now, pump into September potentially for another crash? Would this also be fitting with the kind of Doge layoffs that we've got? Of course, any kind of future predictions just are, predictions and thoughts. But
that's it, right. And the most important thing, and Sosnoff tells you this every day, I don't have an idea, right? Don't listen to me because I don't have a clue.
I have to.
You have to. You got to listen to me all day every morning.
Right.
Feel sorry for the guy. But we do not have a clue what is going to happen, right? Nobody does, and Sosnoff tells you that after 40 years. So be very careful when you're listening to analysts. Of course, some people know better than others. Some people have got a better idea of the probabilities. So all you can talk about is the probabilistic situations.
Mm-hmm. Well, I guess that's when it comes to the risk and reward of what you got, However far you want to move yourself into a position, you just got to be careful. It's your risk at the end of the day. It's your, result at the end of the day. And that leads quite effectively.
But to get the answer of this, right, and let's take a look at the S&P 500 over probably back to COVID.
Oh, the good old days.
Yeah, the good old days. Brilliant. That is quite the chart, right? Now, remember, you saw the earnings chart that Isar and I were talking about earlier. Earnings have grown significantly by as much as 50% from 2021, right? The market has gone from 3,650, it was up to 6,000. Now, that means that you're talking about 65%. So the S&P had gone up 65%, earnings had only gone up 50. We're just back to where the market should be, right? That's all we are. Working out whether it bottoms or not is dependent on your future expectations of two things, which Isar and I covered in a really good way. Earnings in 2026. This is a bit of a basket case in 2025. What are your earnings in 2026? Isar's guess was 270. Let's say 275, because Americans are very good at managing their profits, cutting costs, cutting headcount, and keeping margins safe, putting prices up. 275, and stick that on 20 times earnings, because 20 is the kind of average. If we're going to get all those rate cuts, more rate cuts, higher multiple earnings, higher multiple.
Okay.
Right, because you discount by less.
I'm trying to follow along.
That's a tricky one, right? All you're saying is, with interest rates lower, the opportunity cost of buying equities, rather than sticking money in the bank, right? You've got 10 grand, right?
Wow, bloody hell.
Right?
Where's that come from?
Probably your new job.
Potentially, yeah.
So you've got 10 grand, you can put it in a savings account for 4.5%.
With IG?
With IG, actually, yeah. So, oh, mate, you better be careful. You're going to be on here more often. That's right. You can put it into an IG ISA account at the moment, IG Invest, and you get 4.5% on your cash. So we know we can get that. Mm-hmm. Or you put it into the market.
Okay.
Now, if that interest rate comes down in the future to 3.5%, suddenly equities look more attractive, therefore you pay a higher multiple.
Gotcha. Yeah, I'm with you there.
So 275 times 20, 5,500. That's why the market is where it is. Mm-hmm. It's all about those future expectations, right? Technical analysis is just a short-term thing. Fundamentals are where you get that feel of, should the market be 5.5 or 4,600?
And I think it's what we've probably all definitely proven over the last week as news drives markets, you know.
In the short term.
In the short term, yeah.
Yeah.
And I think that leads on quite nicely to a next question from Boise. And again, this is probably a bit of a FOMO thing. If you didn't buy the dip, how would you buy things now? You know, if I didn't buy Nvidia at 85, how do I buy them in the future when it's past 100?
That's really interesting, actually. Did it get to 85?
I think at the bottom it did.
It literally touched 85.
And now it's recovered quite nicely. Yeah. Again, that's your...
Obviously, be careful what you wish for. It could get back there. And this takes me on to these opportunities with Tasty, right? You see, and the reason I go on about Tasty so much, I didn't know this product a year ago, right? I didn't know Sosnoff, I didn't know Tasty. And it took me a couple of months to really learn about the platform and get used to it. Being on stage with 400 people with Sosnoff shouting at me kind of helped me learn pretty quickly.
In the deep end.
In at the
like
deep
this
end.
Right now.
With you. Yeah. No, you're swimming. Your head's still above water. It's good. I won't embarrass you with any stories.
Thank you.
If you want to buy Nvidia at 85, right, and you're prepared to say any time from now until June, I am prepared to do that. If we can just take chart off a second, guys, so I can put my password into the Tasty account. How much do you think I have to reward you with to take the risk of buying Nvidia 85, promising you're going to buy it?
In terms of a percentage?
Yeah. So remembering you get 4.5% in a savings account.
Yeah.
Nvidia's trading at 107.
Yeah.
Your Boise says, I want to buy Nvidia at 85.
Yeah.
So, all right, I'm going to force you, Boise, to buy at 85. How much do I have to reward you for taking that risk now?
Well, I mean, that depends if I wanted to buy it at this price, though. What if I thought it wasn't?
He's just told you he wants to buy at 85. He says, how do I buy the dip if I missed it at 85? So you know he wants to buy it.
You want to buy it?
He wants to buy it. How much do you have to pay?
Well,
He can have $3.55. So 355 divided by 85, 4%. You can get the same as you get in a savings account by promising right now that until June expiry, you will buy Nvidia at $85. And that's it. That's how you earn money from having missed buying the dip. Or you go out to December. If you go out all the way to December and go, do you know what, I want to maximize the reward there, you can receive $8. You get 10%, Boise. 10%. Well, not quite. 9%. Yeah, a bit more. 9.5% you'll receive for saying, do you know what, for the rest of this year, I promise to buy at 85.
All I can hear is them guys laughing in the gallery.
Now you know what it's like with you lot chatting away.
Probably not
Should
very
have got
helpful.
you an earpiece.
I know. I refused to go on an earpiece because I knew this would happen. I'd get distracted. I mean, boys, hope that answers your questions. Options is something that I'm really trying to get my head around.
Start off. Yeah,
So,
along
yeah.
with everybody else.
Exactly, yeah. So yeah, let's go on to, there's lots of questions, guys. Thank you very much. This has helped us fill the Friday chamber. Lovely. Will the markets become twitchy again? Maybe 30 days to go. And who's questions from this from?
I think they get twitchy again because nobody wants risk into this weekend.
Yeah.
Right? Last Sunday was horrible. Absolutely horrible.
Monkey Man, thank you for the question.
And that's why I just think today there's a little bit of toing and froing.
Mm-hmm.
Watch the 10-year. Right, the 10-year is very, very important because it's starting to say, ooh, do we trust America? Do we trust Trump's America more accurately?
Do we?
And yeah, there's a few screams going on. And you can just see the way that 10-year has traded over the past few days, right? That is confidence in Trump's America. And if that continues lower, right, that means that he's going to have to pay more for debt. And that's people saying to him, stop it.
Can you go to a daily chart? Because it'd be good to see when he went into office and then compared to kind of what he's done over the last.
Unfortunately, it's just it's a future on the 10-year.
Gotcha.
So it's actually a bit tricky.
So obviously that spike up and down is the fun show that we had last week.
Yeah, that was the 2nd of April there. Now remember, tariffs cause inflation, therefore the bond price should be going down the more tariffs you put on.
Yeah.
So that's what it's doing.
Sure.
Yeah.
Lovely.
Okay, next question.
Next question. Do we have a graphic or am I going to just wing it? We do have a graphic. Did Ange pick the best week to have off?
Very clever.
Most probably, because I'm
from
on
Ange.
here now. From Ange, yeah. Thanks, Ange. Yeah, she definitely did.
I don't know, it's so much.
Yes and no.
You know, there's
I mean, you've been stressed.
stressed, but also this is what I love, right?
Yeah.
This is markets only have we seen, 2001, 2008, 2011, 2014,
COVID.
2020, 2022 was a slow version of this.
Yeah.
But this is what markets are all about. You know, this is
having the opportunity to run your brain, and a few of you might have mentioned, Luke Moore put it on earlier. We've got a little story in the BBC overnight. Investors facing their tariff turmoil, it's fastest finger first. You might have heard me say things like
We've
that.
a few things today, haven't we?
And
Look at this shameless plug.
we've got
Who's
a little story on BBC today. There it is. What a wally. And yeah, this is what I was trying to explain yesterday. There's billions being wiped off share prices every second. It's really fastest finger first. Your mind's sprinting, right? If you can work out that you're happy to put money into Nvidia 85 and you're convinced that's right, there's a way to earn 10% from it, right? And it's Barclays. There's no way Barclays should be up 25%. Boom. There's a way to make 10% in 2 hours on that. So volatility is horrible and it's scary, but it's also, there's a lot of opportunities associated with it.
Yeah.
But it is really keeping that risk management. And my God, it's all about discipline.
Would they have written that article if they had seen your Eliminate episode, do you think? Potentially yes or no. Andrew McKelvey, thank you for the question. Any thoughts on GGP up 17% now? Or thoughts for gold for the weekend? Obviously, gold making all-time highs overnight, and looks like it's pulled off a little bit in the morning as well.
And there is the chart price of Greatland Gold. Now, Andrew, I must admit, I know absolutely nothing about the company. It's a penny stock, even though it's so big. The market cap's huge, and it's a penny stock. They need to do a 1 for 10. If Greatland Gold management are listening, you need to do a 1 for 10 or really a 1 for 100, right? You need to, that's when I have 100 shares and I give them in and I get 1 back, but the price goes up 100 times, right? Okay. So i.e. it's not 13 pence, it's £1.30 or £13 even.
Sure.
Right?
Which is why Jordan Belfort like penny stocks then.
Well, this is the problem. The spread's wide. It just makes the company look dangerous, maybe more dangerous than it is. And, you know, I wouldn't even think about trading this because it's a penny stock. This is where guys like Michael Taylor, Andrew McKelvey are the experts, right? Because they look at stocks that do trade at this. But 90% of people will just go, it's 14 pence a share. This is, you know, I'd have to pay, 1% just on the spread.
Sure. Nice one.
But it's been a great trade over the past week, sir.
I don't see many questions, but there's also a few comments. If we want to go to
well, the
GBP,
market is moving. So
GBP's up at 1% at the moment, and euros against the dollar is up 2% at the moment. So we can take a little look at a little market update.
On the old the currency.
On the old forex.
Oh my goodness, yeah, that's right. So it's that continued dollar devaluation. That's what you're watching today. That's what's going to be the worry over the rest of Friday and into the weekend, is what is he doing to the dollar? Does he want to devalue the dollar?
I don't think anyone knows what he wants.
No. Does he know what he wants?
Does he know what he wants?
Thing.
But I play golf, and he wants to improve his back pocket. That's what it seems to be.
Allegedly. Right, gold up 1.3%. That is your way to benefit from a devaluation of the dollar, to be in something that is fixed, right? So that's when you're big. Now, Bitcoin, of course, is it's new tech, it's new world. There's a lot of people involved in crypto that will maybe be suffering from this kind of volatility.
Sure.
Right? So they might be getting stopped out. They might be seeing themselves lose money, so they want to get out. Gold is more, old money.
Egyptian money.
Like Monkey Man. I bet your Monkey Man's got a full-on...
A safe full of it.
I reckon he sleeps on it.
under his mattress.
Yeah.
Potentially.
And yeah, so that's your gold price.
Lovely. Next
Bitcoin
question.
should be benefiting, but of course it's just got that association along with all the, the kids that like to be in Tesla, Nvidia, Palantir, and Bitcoin. Therefore, it gets pulled down as risk comes off. When actually the long-term attractiveness of Bitcoin is more now that Trump's destroying the dollar, devaluing the dollar.
Yeah.
Glencore, we got a great story on that actually.
Yeah, we'll look at Glencore because you've asked a few times. I'm not even going to try and pronounce your username there. Why? So we get the question up, please, guys. Why have they dropped so much?
Let me just see if I can find an article from yesterday. Feel free to fill in.
Don't know what I'm filling, that's for sure. If I go on Glencore, news-wise, they've got a transaction in their own shares.
No, this is actually a purchase that, for me, is one of those opportunities where, this is real value added, if you like. Now, this is mining.com. This is the home of all the real great mining legends. Let me see if I can just find where this is, or if I can search Glencore. There we go. Right, now this story is really confidence building for me, because the last time I saw Ivan Glassenberg buy shares in Glencore, right, this is the genius that created the animal that is Glencore. This is the guy that is without doubt the best trader, the best empire builder, and one of the hardest minds in the mining world, but also in business. And you can see here that he increased to 1.2 billion shares. He owns $3.7 billion worth of Glencore.
Is that it?
And he's increased it by 7.4 million shares, detailed in the annual report last month. So let's see what he paid. Right, now, showing that he'd held the same amount of stock since 2015. Now, let's take you to a chart of Glencore, and I'll show you the last time that this guy bought Glencore stock. And this just gives you a little bit of confidence as to he knows what he's doing. Here it is right here. That is the last time Ivan Glassenberg bought stock. Right, at £1 or £1.20. It subsequently fell to 85 pence, right? That was the real commodity panic. But look at what it did after that. From the £1 level that he bought it at, it went up to £4 within 2 years. This guy knows Glencore better than anybody because he created it, and he's just bought stock somewhere. Well, this is the weekly chart. So Glassenberg's bought stock somewhere down here, right? So that, for me, I've got Glencore in my ISA, and I would consider adding to it.
Okay, there we go. We have another question coming in. I'm looking for any indicator, Tick suggests your favourite, your technical analysis, in the NYSE market that runs opposite of the SPY, blah, 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 blah. IODT, scalp, trade, SBO. This is a long question, but deal with those acronyms. SPY only, currently using tickers, MBB. That's a question.
Right, so and just to explain some of that terminology, 0DTE is zero day to expiry.
Yeah, I got you.
Right, so that means that
I'm learning, people. I'm trying my best.
what you just saw me selling the straddle right? This is the, here's the straddle here, 52.85 straddle daily. And because it expires today at 9 p.m., that's why it's called 0 days to expiry, right? It's not, no overnights. And what he was looking, sorry, question up again, guys. Looking for any indicator suggestions that run the opposite. Okay, so you're looking for negatively correlated. Yeah, so TLT makes sense. Gold is, at this moment in time, gold is trading in either 0 correlation or negative correlation. MBB, what else could you, the defensives, right? So at tobacco, we've got Philip Morris, I would imagine, has been running negative correlation to risk on, risk off. Yeah, wow. That's still the weekly 4-hour chart. Yeah, there's Philip Morris since for the last. It's not as negatively correlated as I thought it would be, actually. Maybe BATS is better. Also now, the 10-year yield's negative correlated. Chart off, thanks, guys. Everybody has to have their eyes on the 10-year Treasury note to work out what's going on. Right, 10-year Treasury note is the one of the day that you're going to see along with the dollar. This is going to be the risk mentality and how to judge what is going on. Along with DXY. So if you look at ticker DXY, now you see the problem, right? Now you see what is going on. And as this falls, so is the market. And so are concerns around US equities and US debt, right? So that's not inversely correlated. That is your lead indicator. Look at that in the, when's that from? That's from 9 a.m. Yeah, that's where it's all centered around. That's where you start to get strains in the system, and that's what Scott Bessent is going to be hammering home to Trump going into this weekend.
Great. Got a few more questions. We'll quickly talk about BTC, but what are the ETFs doing, Richard?
Yeah,
about the ETFs?
The ETFs will be. Well, I assume they're
trackers.
fully. Yeah, I would certainly hope that they are tracking things accurately. Yeah, they will be. They will be.
And we'll do one more question because it's getting so hot in here and I've not dressed accordingly. Corduroy is probably not the most appropriate dress code for a hot studio. Can we do options and futures trading via an ISA or a SIP accounts from RK?
Not the options. Futures, you can trade a SPY. So SPY is of course the ETF of the S&P 500, right? So that's the way that you'll be able to trade that in your ISA. Let me just check what one I've got in my ISA, which ticker, because I do have some S&P 500. It is SPX5 is my UK ticker for the S&P ETF. So that's traded in UK hours and it's traded in GBP, which of course you want GBP at the moment. You want GBP assets. The way that dollar's behaving. So yeah. Okay. If you, out of interest, if you want to know what else I've got in my SIP, I'll run it through. These are the holdings in my SIP at the moment. AstraZeneca, not a great week. Barclays, why did I not sell Barclays when I had it in my blooming ISA. Why didn't I just trade out
said
up
it- you said it on air.
25%? I have Diageo, right? I've got Glencore. I've got GlaxoSmithKline. I've got MSCI India. I've got Occidental Petroleum, which I've been killed on. I've got the S&P, and I've got Vodafone, right? How boring could I possibly be? AstraZeneca, Barclays, Glaxo, Diageo, Glencore, bit more spicy, India ETF, S&P, and the mighty Vodafone.
You've got Vodafone. Oh, you've not mentioned it before.
Smart arse.
Lovely.
Yeah,
All right. No
good
more
stuff.
questions anymore. Thank you everyone for getting the questions in. It's been thanks for inviting me in, forcing me in, maybe
Yeah, well, no, you...
voluntary forced. I felt sorry for you. Discord. No, people have mentioned the Discord quite a few times. We're
Yes.
going to launch the Discord on Monday, so we'll send it out in the chat. It'll be like a growing beast in a sense, so it'll just be a nice sort of community that we'll have there, so we can keep the conversation going. But of course, we encourage you to keep the conversation on the YouTube chat whilst we're live. So it'll just be for post-show only.
I think what we'll do is we'll open up the chat as soon as we go off air every day. You can see what's going on in the Discord. Very excited about that. So that's, we think, from Monday?
Yeah, we can get it on Monday. Yeah, we'll adapt it a little bit. Have you used Discord before?
I don't think so. Somebody sent me on to an American colleague talking about markets and everything. I didn't last long.
I'll give you a tutorial.
Okay. And yeah, look, that's the kind of, with a new producer, the kind of great ideas that can come from the chat room, come from the community, and this man is going to adopt them and put it into practice.
Yeah, and we've of course got the Ask IG email as well. So if you do have questions there, comments, thoughts, all ears. Of course, we do have the chat room as well. So if you've got any suggestions for the show, things you want to see, things you want to talk about, we'll try and make it work if it's a good idea. If it's a bad idea, maybe not. Yeah, there we go.
You say a polite no.
Polite no. Thank you for the suggestion.
Right, let's finish off this week the way that we started, right? It's Monday was horrible. Monday's one of the toughest days in my career. We've seen it out there. We've seen, clients have had a tough time. If you have had a tough week, if it is getting on top of you, feel free to reach out. richard.mcdonald@ig.com, ask@ig.com, and I can't give you any advice. Don't listen to me and my advice about the market. I can't do anything about your trades. That's not my job here. But certainly here if you want to. Some people unfortunately hide these things from partners, from friends. They try and go through it all alone, and that's tricky. So feel free, obviously drop comments into the chat, into the community. Feel free to reach out. And it's been a tricky week. I just really hope we get through a weekend that is
Smooth sailing.
Famous last words.
Famous last words. A virtual hug to everyone. But I think that's also why the Discord would be good as well, because the idea of the community is we can all grow and learn together. We've obviously seen this in the new YouTube as well. So every morning I'm plugging it into Richard's ears. So if you're on the old YouTube, what the hell are you doing? It's been a couple of weeks now. So move over, subscribe, like to it, help us grow. The more that we grow this channel, the more that we kind of get better with it. The better the production gets, the more we can provide to it. If you like to see it, share it with your friends, your family, your cats, your dogs, whoever wants to watch it.
Please keep your risk disciplined, keep your stops. Take advantage of that guaranteed stop that Mini Cooper just showed us. I think I'm going to be using some of those. Andrew Lathwell, thank you very much. Thanks for being with us this week. Thank you for all joining in this week. Many varied emotions. It has indeed. I've worn my heart on my sleeve this week, let's say.
You certainly have.
And yeah, that's the great difference between us and a Bloomberg or a CNBC, is that we've got that unscripted ability to show what we're.
Well, I'm sitting here.
Yeah, and while you're sitting here.
Why am I here?
Have a wonderful weekend. Get out there, enjoy the sunshine, and yeah, we'll see you Monday. What could happen then? We do not know, but be sure we'll be sitting here in the chair ready at 7:30.
I won't be, but thank you.
Thank you. Is this his only one and only appearance? Let us know what you think.
Who knows? We'll find out. Have a good weekend, everyone.
As
Cheers.
the Tasties guys say, peace.